Hey, Austin. No Justin again today. I figured we'd just try to get something out quickly to address the Minister of Finance's announcement of the changes for home buying. So, two big changes announced. First change is that the maximum allowable insurable purchase price is going from $1 million to $1.5 million. What does that mean? It means that you can buy a house for $1.5 million now, and you can get CMHC insurance, so put less than 20% down on it. It's interesting to note that the lobbying from the Mortgage Brokers Association was actually only pressing for a $1.25 million increase to that upper limit. So from $1 million to 1.25, we've gone to 1.5. The second piece of this announcement on the CMHC and Minister of Finance side is 30-year amortizations are now going to be available to all first-time home buyers and anyone buying a newly built property. So I guess that is another way to try to stimulate and address the supposed supply problem that we've got with housing right now. Although if you look at the inactivity in the housing market, it doesn't seem like it. It seems like we've got a concerted effort from the Bank of Canada to slow down inflation and housing price acceleration, which has worked so far. The interesting thing to note is now, do these two changes impact what the Bank of Canada is trying to do? Last week we spoke and I said that I think that we're in store for a 50 basis point rate drop coming up in either October or December. I don't know whether this shelves that, whether this might put that on hold as the Bank of Canada tries to assess what impact this has on housing price activity and the real estate market in general. I don't think it's going to have a huge impact. Again, these are these initiatives brought forth by a struggling government, one that is hoping to increase their popularity by making home ownership more attainable. The problem is when you introduce these measures, you further exacerbate a problem that exists in the housing market. It just kind of pushes it down the line. So what I suspect is going to happen is we're going to see 25 basis points drop in October. We're going to see another, probably now because of this, 25 basis points drop in December. Again, conditional upon how the economy is doing by that time. The economy will still be faring poorly into 2025, at which point we'll see more accelerated rate drops. And at a certain point, when the consumer and the home buyer comes back, these measures will just add further fuel to housing price acceleration. If you remember, this is a while ago, we did a podcast and we talked about comparing all of the G7 nations, because it does really seem like all of the G7 nations are kind of operating from the same playbook. If you will recall, the Swiss have the highest housing prices and they have the oldest average age of a home buyer. And what they've done, I mean, obviously their economy is a little different from the Canadian economy, but it does have some similarities. What they've continued to do in order to fuel growth in asset prices in housing is that they've just continued to extend out amortizations. So there is a solution for making housing continue to increase in value and to make it stable. It just means the consumer pays more interest. So I'll give you an example. On the average housing price of, $650,000, the average consumer is looking at a decrease in their monthly payments by about $300. So average housing price, average mortgage rate, average consumer, $300 a month difference by switching from a 25-year to a 30-year amortization. But that same consumer, that same home buyer now pays 24% more in interest. So we're enriching the banks, we're making housing more attainable, we're following this blueprint, this G7 model, and we're hoping to stabilize housing prices. I just think that if you look at all the variables associated with why housing is behaving the way it is right now, the number one variable is interest rates. Interest rates are affecting confidence, which is affecting the demand side of the supply-demand relationship. And as a result, we are trying now as a federal government to increase popularity or probability of getting in the next election and getting a favorable result by tinkering with the housing market. This will come back to affect us negatively. In the short term, we may see some buyers come off the sidelines, but Canadians aren't stupid, right? Just because they're a first-time home buyer and they're dying to enter into the market, if the market has low sentiment, if the market has a feeling that no one's buying because interest rates are too high, they'll still wait on the sidelines. We may see an influx of pre-approval mortgage applications, which will be great, and it might bring some optimism, but I don't think that these two measures alone are going to spring the housing market back into action. What we do need to see is reduced interest rates. The other part of this to note, of that press junket, I guess, that they did, is there was another guy there, Arif Virani, who is the Minister of Justice, was sitting next to Chrystia Freeland, and it may go unnoticed, but he is advocating for more rights to renters. And that may be a bit of an issue right now, right? Like this rent eviction issue, landlords trying to get tenants out. If you're a tenant, this may not be a really popular opinion, but because of how difficult it is for a landlord to get rid of a tenant, we are seeing tenants not paying rent on condos that landlords need to pay mortgages on. Those landlords, and we've mentioned this in previous episodes, those landlords are trying to get those tenants out, but because of issues with the judicial system, the delays in courts, it's taking over a year. So we've got landlords paying mortgages for a year while tenants aren't. I think at a certain point we have to inject some fairness into that. And although, sure, some tenants may be being taken advantage of, I think what we're seeing more and more of now is a more informed tenant taking advantage of a struggling landlord. That might not be a popular opinion, but it is something that we should start to consider. Listen, thank you very much for your time. Please don't hesitate to hit like and subscribe and all that fun stuff. And until next time, I'm Marcus from Cannect. Thank you very much.